Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to today's Nadex's presentation on weekly market analysis. We were just laughing a second ago. It's amazing that it's March 2, right? I mean, it literally feels like we just rolled into 2020 or 2021, and now we're already at March. It's just been a blink of an eye, and it's just flying past. So, welcome to today's presentation. We're going to do some weekly analysis, kind of break down, see what's going on in the markets. Let's just dive right into things today and kind of speed through. For those of you that don't know me, I know many of you guys are repeat people at this point, and I really appreciate you guys coming back every week, and hopefully you're learning something new. If you are brand new here, I do these sessions for Nadex. I'm an educator at heart. I love teaching people things. I've been trading for about, and I hate to say this, but like now it's almost 22 years. I started actually trading in the tech bubble. If you guys remember the craziness that ensued with the tech bubble and Y2K, where the world was supposed to stop because computers couldn't add that extra digit. If you guys remember that. So I've seen a few things in the markets, and I started off much like many of you out there, retail trader. I'm not a 12th generation trader. My dad wasn't on 12 different trading floors or anything. I started because I had passions for the markets, even down to a very, very young age. So for me, uh, learning this, I did a lot of the wrong things for so many years, and I learned the wrong, basically the wrong way to trade. And I started with traditional options and stocks. I found currencies, got introduced and learned how to trade futures. Obviously, found binary options a few years ago with Nadex, and done a lot of different things in the markets. I did spend some time inside of one of the advisory divisions of one of the big three banks. So I learned it from the outside, and then I got to see what it looks like on the inside from Wall Street. Spent a little bit of time in there. I actually, realized it very, very fast that it wasn't what I thought it was. I left that industry to come back out and start teaching people. And it's interesting. I was very, very gifted in my career, and I actually got to work basically like 2.5 blocks from the New York Stock Exchange, where I stayed in New York. I actually lived. I could throw a baseball to the New York Stock Exchange. I used to walk past it every single morning. So it was a very interesting experience being up there and hearing traders. You always hear about Wall Street, right? I was right there. I was, walk past it every day. If you guys know where the bull statue is, the bull statue at that time was right outside of my office. I could literally look out the window and see the bull statue. And there was always people taking pictures. It was crazy. Besides that, I have, obviously 3 little ones. This is my wife in the picture as well. The little girl in that picture, she's actually sitting behind me. Her hair is like 3 times as long as it's in that picture. So if you hear a little voice, she's doing some coloring today. So she may want to pop up, and she loves webinars. She sits on my lap and watches the screen. So if you do hear a little voice, you're not hearing things, it's just Jen. You guys, if anybody attends the morning sessions, you guys know that a lot of times she's bouncing around sitting on my lap, and she loves, at 3 years old, she already loves watching charts. It's amazing. I can't wait to see what she does with the rest of her life with trading. So with that said, let's cover the Nadex disclaimer. Trading on Nadex involves risk, and it may not be appropriate for all. Members risk losing the cost in their transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material provided herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. You guys have heard this a few times, right? And you would think that I would have it memorized, but there's always a few lines that we change back and forth. So I got to make sure that I don't go into like, resuscitation mode where I'm like, wait, oh wait, that's the wrong one. So what we're going to cover today, our agenda for these events on Wednesday, or I'm sorry, on Tuesdays, it's a little bit different than our morning sessions. What we're going to do is we're going to cover the upcoming news events for the week. If you guys have never heard me talk before, I'm going to say a couple things right off the bat. One, I absolutely love news events. I'm not going to go so far as put a title on myself as a news trader, but I absolutely love them because they provide catalyst for movement inside of the markets. It's very easy to target, obviously, as you can imagine, with 3 kids, 2 11-year-olds, and an almost 3-year-old. Life's pretty busy, so I don't have time to sit in front of a computer for 18 hours a day. I love news because it tells me when I need to be here, and that's a great thing. Then what we'll do is we'll dive in and we'll talk about the indices. We'll kind of break them down, see where we are. It's now that we have these morning sessions from 8:45 to 9 p.m. I'm sorry, 9 a.m. Eastern Standard Time. It's nice because we can kind of talk about what we saw yesterday, and actually some of the levels we talked about yesterday were great trade setups. And we'll see what else we have in areas we should watch out for the rest of the week with the indices. Then we'll go into Forex. Forex has had a lot of opportunity lately. There's a lot of things going on right now as well. You know, last week we were shooting missiles. We have stimulus packages. Gold's been going. I mean, there's a lot of things going on right now that are affecting the currency market. So there's been a lot of trade opportunities there. And again, if you're new to that market, don't worry about it. It's not as scary as everybody makes it out to be. Last but not least, we'll cover commodities, particularly gold, oil, and silver. I know there's other commodities out there, but due to time constraints, obviously we have to make sure that we get those big three. And been a lot of fun trading those three, let me tell you. All right, so with that, let me just dive right into the indices here. Where is the chart? There we go. All right, so that's the yes. All right, we're going to start off with the S&P 500. Some of you that watched yesterday, we talked about where we were, and yesterday morning we were sitting right around this level here, and we mentioned one of the things that we were actually, you know what? Hold on, I jumped ahead. Let's go to news first. I was like, wait, I shouldn't be here yet. All right, so news for the week. Today, obviously, we had some GDP data early. Tonight is actually a trade that I'm watching out for, and that's why it kind of threw me off because I have my notes of make sure things that I cover. Tonight, the GDP for Australia, if you are a currency trader or if you like to trade gold, this is one of those news releases that is very easy due to the time, but also because there is nobody else trading at night. There's supposed to be a reduction in their GDP on a quarterly basis. Now, this is a figure that they don't get right too often, so there tends to be a lot of surprises. So if you were new to currencies or new to trading news, this is one of those releases that is, again, it's one of the ones that's a little bit kind of easier to kind of set your feet into news trading tonight. And again, I'm not going to go into the specific contracts, but we'll talk about different levels on this one. Typically for 7:30 p.m., I'm looking at the shorter duration binaries, maybe even the knockouts, depending on where we're at. But again, there's a great news release tonight. Tomorrow, okay, Wednesday. Oh, she's singing behind me, you guys may hear. Tomorrow morning, we start off with ADP non-farm employment change. Now, this is obviously a big number. It is a little bit different than NFP, which will be on Friday. But again, it gives us kind of an early look. And this one has had some major misses lately as well. It can really set the tone for the U.S. Open tomorrow if you're an indices trader. Followed up right off the bat, we have ISM services. Now, why is this, again, you may say this is, kind of a medium impact type news release. Why is that important? Because if the ADP number is good, the ISM typically provides an opportunity for a reversal, okay, being at 10 o'clock. This is the most common reversal time. So it kind of is like a wham bam type situation, right? Kind of like those old Batman cartoons. You'd always have the one noise and then the second noise. I love these opportunities in the morning. And again, 10 o'clock is my favorite time to look for reversals in the US stock indices. And again, employment send us one direction, services PMI can possibly send us in the other one right off the bat. So that's like the 1-2 punch. Right after that, we have crude oil inventories. Now, what we've seen over the last few months is that crude oil inventories, a lot of the moves have been happening prior to the actual news release, okay, particularly during the European session. Now, we'll talk about where some of those levels are. Depending on where you live, this could be something that you want to look at maybe late tonight before you go to bed or first thing when you wake up tomorrow morning. Being a 10:30 a.m. Eastern release, a lot of stuff can happen from now till then, but we'll kind of cover where we're at right now and levels where we should watch out for. Besides that, there's not much else, for that on Wednesday. On Thursday, this OPEC meeting, and again, this is the one caveat. I love oil releases on Wednesdays, but what's going to have more impact? The current inventories or the OPEC meeting talking about supply? Yeah, you guessed it, probably the OPEC meeting. Now, that OPEC meeting is also being balanced with Fed Chair Powell speaking. Powell has the potential to move the markets in crazy different directions, okay? If you guys didn't know, last week we talked about the $1.9 trillion stimulus package. It passed the first house on Saturday. They're expecting, or it's basically an imminent that it's going to pass the Senate. If it passes before, again, there's probably going to be some language from him about that. Again, we'll kind of see. A timing really kind of matters here. So, I mean, oil may wait for him. He may wait for oil. He at least has a fixed time. But again, it's kind of an interesting setup there. But just be again, a little bit watchful of what we see in these OPEC plus meetings. Now, the last time we got a headline out of them, they said that basically for April there was going to be some production changes, but they were not going to release them publicly. If you think about what that means, I highly doubt they were going to consider restricting production, right? It's like saying, hey, listen, you know what? I understand that the company overall is not doing well. Um, you know what? Don't pay me as much, so I'm going to be a good player. It just doesn't work like that, right? So although they weren't going to release what they were, they are going to have to mention what the production kind of the increases or the decreases were. I'm expecting we'll get it this time since it was already in, and oil, its price is back up, quite high versus where we are. I don't know if you guys are watching gas prices, but yeah, I mean, for me right now, it's the highest we've seen gas prices in a year where I live. So that again, it's gonna be dominated by headlines on Thursday. Now next Friday or this Friday, the 5th, obviously non-farm employment change. This week I actually think that the unemployment rate may be the bigger number to watch. The unemployment change is going to be big, but they're forecasting that we're going to have a 0% change in the unemployment rate. I actually wouldn't be surprised if that number comes in a little bit below. Like if we get a 6.2, I actually wouldn't be surprised. Remember, a lot of times these data subsets, I mean, they can always change, right? They can make revisions to them. So you got to take it with a grain of salt. But I just feel with everything that we've seen with manufacturing going higher, services going higher, some of the unemployment numbers starting to drop, I feel like this number could be poised for a bit of a beat, right, to the top side. And again, that would kind of go into like a feel good Friday, right? I mean, the story could be, well, last non-farm, right? We saw an increase in jobs of 49,000. This time it's 185,000, right? So that's already a positive right there. If you can tack that on and maybe we get a 6.2% unemployment rate, I mean, Biden has made it made it a point to say, listen, we're trying to get back to full employment. And again, we were seeing rates much, much lower than 6.3, right? So again, we got some room to run here. And again, that could lead us into a feel good Friday, right? Those end of the week rally type situations. And then again, the CAD after that, the IVPMI, I'm not really worried about it. So it's not a huge week for news releases, but some of the ones in here, are standard go-tos. I think tonight, the 7:30 p.m. one, I think this is going to be a really nice one, or at least give us good potential. I mean, it comes in exactly on. Obviously, we're not going to see movement, but you know, look historically how often they hit. It's more times than not. They have a quite a large miss, right? Quite a large miss. And again, the Aussie in particular has really been kind of bouncing around a lot lately against the dollar. So could be an interesting setup. And again, I think Powell's due for some fireworks. But you know, as I mentioned, and this is the last comment on news, we are expecting the full passing of the 1.9, like the full checks are coming this day. I haven't seen it yet. I mean, maybe it happened in the last half hour. But once they say when the checks are actually arriving, that should also provide a big boost in the market as well, because people are going to be getting a lot more money. So just things we need to watch out for. All right, with that said, that's our news for the week. Now let me jump over to the S&P 500 and go over the indices. So yesterday, if you attended our session, we talked about kind of a range here, and I'm actually trying to play around with one of the tools here just to make it easier, because this is great and it's visually, you can see it visually. But again, I'm moving these around to get that middle 33%, and you can see on my draw, I was a little bit off. It's kind of, I should have pushed it here, right? I'm using the fib tool now to do kind of the same thing. So you may start seeing this on some of the charts. Remember, this is basically the curve, right? What we're taking is areas of supply and demand, and we're kind of figuring out where our bullish and bearish biases should be. And again, in the middle, it's kind of no man's land. All right. Yesterday, we talked about if we were able to clear through this 85 level, there wasn't really a whole lot stopping us until we got up in this 89.92 to 89.99. And I said, if you do take this long in a breakout, make sure you get out here, right? There's going to be some selling, and there was, right? It kicked back and it kind of pushed higher. Overall, I said that you need to have your profit targets. You got to be out before 39.06, right? That was the last time big groups of sellers came in and just absolutely just hammered price down. And you can see, I mean, I can literally let the line go across. You guys can see that's exactly where it grabbed, it turned, it retested, and pushed lower. So where we are now from yesterday morning, not only was there the long opportunity we talked about, but, I gave you the reversal. We had a rollover. Right now, again, we're having issues that every time we kind of push far, into this upper third, we get pushed back again. Now, we're kind of playing around right at the top of no man's land here in the middle. Ideally, I don't like to take any positions in here. As usual, taking things at 12:30 in the afternoon on this one is a little bit harder. It tends to be more of an early morning type trade position. And again, it rallied up, and you guys can see, where did the reversal occur? I don't know if you can see at the very, very bottom of my screen if it's large enough, but you can see the reversal candle started at 10 o'clock in the morning, right? We had a push up from early morning. The European session drove us higher into a level of sellers. And again, I left all these lines on from yesterday. They need to be readjusted. Drove up from European session up, and then boom, 10 o'clock, we reversed all the way back down again. And there's a decent drop of about 30 points in the S&P 500. So the trade is gone for the morning. Big question is, what can we do with it now? Just like we were watching this 39.06, I think that we need to keep an eye on this level right here at 38.50. Let me get this tool right here and pop it right there. All right. The reason why that's an important level is because there was a very, very big movement up in price. So if you're going to get short in a position from now till then, I definitely think this is an area where you need to start collecting profit. Now, I'm not telling you to get short. I'm just saying if for some reason you have been short and you wanted to continue to run this down, right, I would look to be, making sure you take profit around 38.50. Now, could you use 38.50 as a reversal level, right? You can look at this and say, hey, look at all those sellers right in there. Now, let's change this to black so you can see it. Look at all those sellers in there. I know you mentioned in the past when you have wicks that do this, this tends to be a good area where there are, you can see buyers. And again, a large push off. Brian, you must love this level. I do think it's a pretty decent level. Depending on when we hit that level, it could absolutely be a reversal area. Now, it is obviously in the, still in the bottom kind of half of this middle area. It's the only thing I don't like about it, and I will say that there's one little level a little bit lower that's really kind of breaking back into the area where I start to go full bull again. But for right now, I would say I don't really have much that we can take for this afternoon. But watch it come down. Again, any type of confirmation pattern, something that looks like this, but in obviously flipped upside down, kind of a stab in, a pullback, and then one that doesn't go as far, that kind of Harry Potter pattern, there could be a decent buy off of either of those two levels. All right. Now, let's go across and go to NQ. I know we normally do NQ first. So NQ, we also talked about how this one was a little sloppier, right? We had a level. We didn't expect it to hold. We didn't really have much analysis over here. These candles here were not really giving us much to work with, right? I don't know if you guys can see the candles. I'm trying to make it a little bit bigger, right? They weren't really giving us much, and we knew that price was probably clear up until this area. That's where the last spike happened, and it kind of fell back down again, and it did. I mean, that's really went right up and right above that level, and then found the sellers up top. So it also had a trade that you could have taken in the overnight, right? Here's 3M. Here's the European session pushed up, and then there's the 9:30 candle. Again, this one went a little bit early at the open and just rallied back down. So the only trade setup we had on this one, and I think it's still valid, right, would be if price starts to collapse a little bit farther. Now, we talked yesterday, the same thing that we're mentioning, that there was nothing stopping price here. We have something similar going on right here in the NQ, right? Now, this area is a decent level, going from, 13,031 down to 12,965. You're talking about what? About 80 points to the downside. Basically, it's a level that we had a lot of basing in, a nice push, and then price really spent a lot of time here. It left once and came back again. So the next hit through this level is most likely going to be 3 or debatably the number 4 hit, which is, again, when we hit 4 times, that typically is the telltale, yup, it's breaking through. Now, ways that you can play this later in the week, and again, I don't know what day it's going to come or even if it's going to come this week. I mean, maybe it puts in a bottom here and it decides to rally higher. Remember, I'm an if this then that trader. If it hits this level and does what around the right time and all the ifs, that's where I'm looking to take a position like this short. So this is not a trade recommendation. It's an area that I think you should focus on with a break of 13,030, right? 13,031. Look for some type of basing below this level and then a pullback, and then we have an established level of risk to drive lower. Now, as you can see down here, just a bit lower, the 1 to 3 is what's marked off, right? You can say, well, why is it here? Why isn't it the green line? This is the 1 to 3 move, right? This target is a bit lower down here at 12,950, which again is a psychological level ending in the 5-0. So if you like this position and you wanted to get in, do you have to get out at the 12,965? No, but I would say that make sure that you are at least collecting some profit at 12,9. Here, I'll put this on there. It's probably a little easier for you guys. There. And obviously, the second place that you want to make sure that you're getting some profit in this one would be here, right? If you're using more than the 1 to 3. For me, the 1 to 3 is typically fine. And the reason why is because this is a gap. There was a huge imbalance of price that punched higher, not necessarily a level that you want to kind of mess around with there if you're in a position short. The worst thing that you can do in trading is to be in a position to be like, yeah, I'm making money. Run into an area where that, again, we know that there are buyers. We've seen it. They've stopped price and turned it around. For you to get greedy saying, yeah, my profit target's here, and have this roll all the way back on you, right? There's nothing worse than that in trading. And again, that's, That's basically greed getting the better of you, right? So again, like I said, I don't know when this is going to hit. Maybe it's today, maybe it's tomorrow, maybe it's next week, right? It's something that's on my radar for an if this, then that trade. All right. As far as having the ability to go higher, I feel that all the indices this week, obviously over the weekend, J&J got approved. I know those vaccines are being shipped. I think Maryland got like 40,000 of them. They're in delivery and they start over today or tomorrow. So again, increasing vaccinations is good. $1.9 trillion worth of stimulus is good. Direct payments to people is good. They will be spending money, catching up on mortgages, paying off debt. I mean, all these are good things for, eventual profit later on down the road. There's been slight mentions of raising interest rates, but I don't think we're quite there yet. So again, in the immediate term, does the NQ have the potential to pop? Sure. I mean, absolutely. It only takes Powell saying one thing or remaining, kind of bearish, I'm sorry, not bearish, but dovish, right? Particularly within regards to interest rates and inflation, right? Not saying inflation, we're going to let this sucker run hot longer. Those are all good things for the NQ, right? Going on to the Dow. So the Dow yesterday had the same scenario, and we liked the way that it was rallying up. We did mention that, hey, listen, this is a very strong move. We should expect somewhat of a retracement. And it was the same thing. It was an if this, then that type setup. And we said, listen, if we're able to break through the zone, right, it did turn sellers away, although it's deep. If they were able to turn it away, we were looking for the same confirmation. A bit high, base, pull back, and then again, we were looking at profit targets up at 31,895. This zone has actually done quite well for itself. Now we've had a hit here, and let's see. What was I using? I was using the little arrows. I was looking for X's because I don't have. Oh, I guess I could use this one. So we have one there. Oop, I don't need one that big. We have one there. We have another hit here. We have another hit here. And again, you could debatably say, hey, listen, we got one more sitting right there. This hasn't broken yet. And you're absolutely right. But you know what? The fact that this one has hit this level this many times, I'm really excited for it the next time it does hit. Now, if you're taking this level short, you absolutely could have. You could have actually used a small target intraday here, but there's been opportunities to take this one short. We were kind of expecting it after this such a huge rally in price so fast, but right now I'm really into this one. I like it. If we can break 31,651, we have that correct pattern that we are looking for, right? That kind of hit, right? We blow through, base a little bit, pull back. There's our established level of risk. There's our targets up top. Make sure you're out before 31,895. Now, again, a lot of this too has to match with your experience, your comfort. I'm not going to say whether this is better as a binary or call spread because there's a lot of factors involved with this one, particularly about when it hits and what was the catalyst to drive it to that level. I don't know if you guys have seen yet, and I don't even know if the invitation is out yet, but there's another education summit that's coming up. And one of the things, I mean, again, this is not, I guess it's a shameless self-promotion. I'm actually doing a talk on using the shorter term binaries, how to take advantage of the fast moves. And again, that's kind of where this comes in at. Something like this would be more of a, maybe a shorter term, maybe a 2 hour, right? Or maybe even, I mean, I don't think a 20-minute, but maybe like a 2 hour or something like small intraday type position. Because again, we've seen the breaks. Buyers aren't going to stay here forever. When they finally break through on a technical basis, there's nothing sitting there stopping this one to go much higher. So I do like that one. I think that's pretty decent. So those are the three indices. Let's jump across. I'm going to switch platforms here just to go over to currencies because again, I will just do everything on TradingView, but right now I'm still using this because I have my company indicators and things on this one. Right now, again, Aussie dollar I said is a very interesting play. Okay, so yesterday I talked about being high in the curve, and we saw some basing and a little bit of a pop, and I was waiting for this to kind of go to an extreme level. Now, the level I was looking at was 78.30, and you can see we're pretty close. We're only about 6 pips right now away. That's just kind of the start of the zone. The zone itself is about 20 pips, so we definitely have some more leeway. Remember earlier when I mentioned that we have a news release later on this evening, right? Remember when I mentioned that we have this right here? Now you can see GDP is they don't miss it tons, but you can see there's a lot of misses. I mean, when this comes out on a quarterly basis, you can look at 2020, right? 2020, they did not get this correct one time. 2019, they were pretty good. 2018, they were horrible. 2017, they were only right one time. Okay. So with that said, and again, if you want to look at a little bit more, March, they missed. March, they missed. March, they missed. they don't seem to be as accurate on March. This could be a potential miss today. So this is actually a level that I'm looking for tonight. You can trade this both in spot currencies, but especially on Nadex, right, in the shorter duration contracts. Aussie dollar is a big one, right? So it's at a level. I'm looking for some basic. I want to see where it's at right here. Remember, if this comes in negative whatsoever, say they don't even clear, you know, uh, you know, say they don't come in, say this comes in at a 2.1, right? That's a disappointment. That's bad for the Aussie dollar. Boom. So it's set up on a technical and a fundamental based level. All right. So those are two good things there. Let's see. Can I ask what you use to draw your levels on the chart? Sure, Ernest. On the last chart or this chart? I'm not sure which one. Let me know. So the other one was TradingView. This is MT4. Let me know and I can answer that question for you. But anyway, this is a level that, again, I'm looking for reversals. You know, you can see here on an hourly basis, you know, it's a pretty decent level, very strong move off of it. It's high in the curve. On the larger scale, again, it is in the higher end of the curve here. So again, all lining up for me, something I'm looking for. All right. Here's a position we talked about yesterday, right? Now, this is a level you guys can see. So yesterday morning, I mentioned this one, and I don't know if it was for the Nadex one or for the one I do for my students right afterwards. But you can see we had the touch and the drop all the way back down for the 1 to 3. It's kind of set up the same way, right? The Aussie dollar position is kind of sitting in the middle. This was the same way, and again, strong movement out. And you can see, didn't have a very big touch, drove right back down again. And now we're starting to rally higher. This one, it doesn't have as clean of a setup right now. Now, again, yeah, there's a Harry Potter here. If, you know, people were looking to take this, there was one in here. I would say right now, excuse me, we need to shift this a little bit higher. This trade is obviously out from yesterday. I would say, I don't know if you guys can hear her. She's singing in the background again. She's like, Daddy, you're talking a lot, so I'm going to talk a lot too. She likes webinars, so it doesn't quite fully grasp that I'm talking to people live. 38.66, again, something I'm keeping on my radar. You can also trade the Aussie Yen at Nadex, and with this rallying higher, it's kind of getting, hey, Jinjin, hey, shh, the people can't hear. Kind of the same thing. If we were up in this range, but at 730, there could be some interesting opportunities there to take that one short. Now, the caveat to this is you guys can see where it's located. I guess I'll do it on hourly. You guys can see where it's located right here. It's just approaching the top third. Okay. Typically, when things come out, again, you can see that there are sellers. Oh, hold on, I forgot. You guys can't see my cursor on this one. Let me build a cursor real quick. If price pushes up into this level, this is what we're dealing with right here, right? If I drop that down, you can see that there are two levels on the lower time frame there, right? So if we approach this area here, you can see strong push down, and again, it was a retrace from here. So two interesting levels. Again, if this does nothing but kind of slowly grind its way up, also a potential opportunity for later on this night. Okay. Euro yen. So euro yen, yesterday we talked about this warning level. And again, this is what I'm looking for, these large explosions in price, right? It stopped here because that's where we were talking about it yesterday. Hold on, as you can see, we got an early morning push into this one. Was this at 3 o'clock? Yeah, this was a European open session. This was the European move, and now we're kind of basing sideways. This one has been hard because, whoops, on a 4-hour basis, there's not a whole lot of clean levels to be able to grab in this one. Sorry, she wants a little fruit thing here, and she can't open it herself. There you go. So, although this one is, I mean, honestly, the setup was here earlier today. I'd be looking for somewhat of a kind of stalling / reversing. But right now, there's not a whole lot over here. So I'd say the first time we really have a clean short in this one is probably up into the 129.40 range. Hopefully, again, this is why, you know, I try to highlight these sessions, you know, days prior. But this was the trade setup. I think. Hold on. You know what? Let me make sure before I say this. I think. I just want to make sure I'm double checking something. I did have my Nadex position or my Nadex platform up. Let me check. Where is it? Yes. This is one of those ones that we mentioned yesterday, and I always like to kind of, it's one of those things. So this takes due diligence, all right? Depending on what your level is with comfort with Nadex, for those of you that don't know, there are binary options, there are call spreads, and there are knockouts, okay? They all have their pros and cons. This happened to be one, and I said, this doesn't happen all the time, okay? But when it does happen, I really enjoy these opportunities. So we can see right here, I'll move these over so you guys can see it, right? So you can see where the top and bottom of my risk level is, right? You're able to see right here that the low of this, right? The low push this morning was 128.18. Okay. Yesterday I mentioned that, hey, this is one of those times where we have a knockout that just happens to be in the same area. Okay. The bottom of the knockout was sitting at 128.10, which is sitting right here. Okay. So it was inside of our zone. The risk didn't come down. There was about an 8 pip buffer in there. So again, was the risk very, very high when it touched that zone? Not really. And since that time getting in, right, since we got in here, this thing has now rallied 78 pips in that time frame. So just one of those examples about knowing where your knockouts are and placing them on your charts, whether you choose to chart at Nadex or externally, right? You got to know where those things are at all times. And I know it can be, trust me, there's a lot of moving pieces of this. But again, this is one of those opportunities that was a bigger time frame. We saw nice pushes off. You got to do the extra homework on this one. And could you have traded this one in the overnight? Yeah, absolutely. Sure. Could you have set this to actually trigger when we hit the 28, 23? Sure. Absolutely. You could have. You could have been asleep, woke up, and then now being 72 pips up inside of this position, right? So again, all the stars lined up on this one. Remember, if this, then that. Right now, I don't really have a great area for reversal, but we'll kind of see how this one rolls into tomorrow. I wouldn't use this zone right now. This was not a zone I was interested in taking. The pound. So we've seen the Aussie Yen driving higher, almost in an area of supply. Yes, right. We're almost at a level where we're looking to get short this position. Euro yen, we just talked about how we had a big push up. It's kind of in a level now. We're kind of waiting for something maybe a little bit more, right? But it's driving higher. We're kind of looking for short, right? Pound yen, we are also doing the same exact thing. And we just happen to have a level here that we had a great level of basing. We've touched it, forced away, touched it again, slammed away. We're approaching the top of the intraday curve level. So again, kind of another similar situation where there's a potential trade setup here to the short side. Now, a couple things I want to say about the pound. Fundamentally, and again, 90% of my trading is done on a purely technical basis. I do, on a fundamental basis, feel that the pound has a little bit more strength right now. I feel like they hit their rock bottom. It's not an ideal setup being in the middle, but I do like how we're starting to break out both on the small kind of intraday curve, like our intraday bias, as well as our weekly bias. It is a possible level. It has been here now. Let's see. We have one here. We have one here, and we're about to have a third. So it has had a couple hits. Go ahead, Jin. I will say watch for this one, okay? If this breaks through the 149.28, analyzing kind of this area here. Whoops, hold on. Let me put this way. Analyzing this area here, there's not a lot of clean pullbacks. There's not a lot of clean basing in there, which leads me to believe that if we're able to break through the 149.28, this has the power to run up about 90 pips to the far reaches of the curve, kind of on an intraday level. Okay. So it's one of those ones, although we have the yen in a position on multiple pairs where it's looking for a reversal, this is one of those ones, if it comes up and bases in this level, I'm no longer interested in taking this trade here short, right? Then I'm interested in looking for this one to break through the top. And again, you guys know what this is called. You guys have heard it a million times now. Looking for the Harry Potter. Okay, looking for the Harry Potter. So again, it's an if this then that. We may trade here if we can get into small risk. Sure, we can. It's lined up on a technical basis on three things. But if it gets in here and starts basing sideways, watch this thing to kind of punch higher, pull back, and go up to 150. All right, pound dollar. So pound dollar today. This is also a European session trade. I'll put it on real quick. Basically, there's the European Open session. There's where we are right now. So this one is 112 pips since the UK market opened, right? Since the London session started. So major mover. Now, we had talked about this one, and it's kind of unfortunate. Here it is on a 4-hour basis. Okay, I don't know if you heard me joke. I have one of my students that he jokes and calls it pipettes, right? You guys can see how close. This one did not trigger. We talked about it hitting this extreme, extreme bottom of this intraday curve level, looking for a place to get long. Yeah, unfortunately, this one did not. I mean, if you did an if this then that, like if it hits this 138.56, get in, didn't work. You missed it by just the smallest of margins. The low got down to a 156.50, so we missed it by 3 pips. Basically, the spread is what we missed the entry by. And again, that's why sometimes, Nadex is more of a kind of area entry because the strike may not line up exactly perfect, right? It may get down to a risk level for you. Sometimes, again, that's one of the biggest advantages that Nadex has is, it's in a it's in a region, right? In a zone, right? In fact, in this one, there is a couple things down here. Unfortunately, the knockouts were a little bit far for this one. Yeah, unfortunately, they were a little bit far, so it didn't quite match up. But you guys know what I mean. What time frame do you base your trade on? Great question, Bob. So, guys, you can't see the questions asked, but Bob is asking, what time frame do you base your trade on? So, Bob, for the analysis that I do for this, typically the curve that I'm using over here, I use that on 4 hours. I am an absolutely huge believer in 4-hour time frames. I tend not to go much higher. I'll use dailies if I have to, but I love the 4-hour time frames. That's what's giving me my bias for bullish or bearish, right? That's what the quote curve is, right? Then I typically will drop them down between, typically 30-minute and 60-minute. Now, is 30 and 60-minute the ideal time frame for you to look at? Question is maybe or maybe not. Okay, and the reason I say that is because I've been doing this for a number of years. I can look at a 30-minute or an hourly candle, and the way that the open, close, high, and low are, I can typically tell you what the smaller time frame candles look like. Okay, just from experience, right? Because remember, on a 30-minute chart, there is, a whole bunch of, there's 31-minute candles in here and 5-minute candles. And if I go to a 4-hour, it's the same thing, right? There's a number of these smaller candles. So just how much data you can see. So I'm always hesitant to say, hey, you should use a 30-minute. You should use a 60. Most of these charts, though, I'm going to be using a 30 or a 60, more for intraday trading, okay? With Nadex, because so many of their contracts expire on a daily basis, I try to use lower time frame analysis. Okay. Obviously, with things like a knockout, because the duration is longer, right? They don't expire till the end of the week. We have the ability to kind of look at higher time frames. And like that euro yen trade that I just talked about, that's moved like 90 pips. That was one that you can see on a larger time frame. And because it was aligned with a knockout, it's something that you could have held for a longer period of time, if that makes sense. All right. Good job, Jinjin. Good job. So hopefully that answers your question. All right, so switching over to dollar CAD. All right, so dollar CAD is an interesting position as well. We had a huge rally up. You guys remember last week when everything was about dollar strength? Well, that tends to revert on us, right? It did. It ran into a level. Oh, I'm going to sneeze. Hold on 1 second, guys. Thank you. Hopefully I muted that in time. And then my 2.5-year-old, she's like, bless you, daddy. I'm trying to teach her right. We're looking to play the retracement on this one. This was an if then that as well. If we break through this 125.58, I'm also looking for this one to probably come. And again, this is what it looks like, guys. If it comes down and it bases in this level, that's where I'm looking to get this thing short. I'm not looking, if it does this suddenly, I'm not telling you guys to go, oh my God, go short. I mean, once it break, no, I'm looking for this thing to come down. I do think it will have some problems with this level here, although I don't think it'll hold. This is the last time that we've actually been able to see any sellers stepping in. Sellers and buyers kind of battling back and forth. So I'm kind of looking for it to come this way before it does its break. And then again, that'll be my established level of risk, looking for, an approximate 60 pips to the downside on that one. And again, number of ways you can play this one. It matters what time. I'll tell you right now, if we come down and start the base in this level, because again, today's trading day is, it's half over. There's not a whole lot in the overnight, but oops, that's not the one I wanted to talk about. If we come down and we start basing here, is this a possible level that we could use for tomorrow's news trades, right? Could we use this for this guy right here? Absolutely. Absolutely. What happens if this non-farm employment change number, instead of being 302,000, what happens if this is, say, 174, right? That would be considered negative for the dollar, which also coincides with this, which means a negative dollar, being in the dollar CAD pair, it should go down. So you see how news trading is also setting up for what we're seeing on a fundamental basis. So again, another potential opportunity. And again, could it base along here and could it be a great data point and go right up to here? Sure, it could. So we got to kind of see what it's looking like ahead of time. And then again, depending on what the Nadex strikes look like tomorrow, there could be, and again, if you've ever heard, Dan speak, he's talking about there's creative ways to put on multiple different types of Nadex contracts, right? To be able to play booms or busts, right? So there's a number of different ways that you guys can play this one. But again, definitely a level to keep on your radar. Now, dollar Swiss. So dollar Swiss, we're waiting for something. We mentioned the last few days that it has basically been it's what I call a risk on type trade, right? And what I mean by risk on is the Swiss is typically associated with political kind of, geopolitical based events, right? You go to the Swiss for safety. Well, I said I love news, but I'm 90% technical, a technical trader. As you can see right here, I am now on the 4-hour time frame. Okay, remember, I just mentioned to you guys, and again, this is maybe the gem that you take away today. I use 4 hours for establishing the curve. When we are in the upper section, right, when we are here in the upper third, I am looking for short opportunities. I also told you that I absolutely love the 4-hour time frame, right? Well, there's a 4-hour time frame in the upper reaches of the curve, waiting for a pullback. As you can see, we've already blown through, and it's moved quite a decent amount. I mean, this one's moved about 52 pips. I mean, for the Swiss, that is not bad. The Swiss has a daily ATR of 59. So, really in, I don't know, less than about 8 hours, this has moved almost its entire daily ATR in that time frame. So again, is there anything to trade right now? Probably not so much. I mean, it's already pushed through. It's already kind of given us the establishment. And again, if you're not a big time trader, you guys can see right here. Here's an hourly trade. The 30-minute didn't trigger, although actually, let me see. Hold on. I'll tell you right now if it did. No, it didn't signify it on that one, but it did do it on the hourly, right? So again, there was your base at the European Open. Again, this is the European Open switch. Pulled down at the US Open. We pulled back, got our news at 9, and then boom, dropped to the downside. So no trade set up right now. I would say if you're interested in trading the Swiss, 91.91 is a level that I kind of keep my eye on. I think we mentioned that one yesterday during the morning session. Any short that you're in, again, 90.84 is a decent profit target. Now, dollar yen was also one of those ones, and I mentioned yesterday, I didn't really have a great place to go. This had been back and forth, back and forth, back and forth, back and forth, back and forth. There's been a number of opportunities. There's many ways you guys could analyze this one. I mean, you could talk about, there's a channel here. Yeah, there's a channel there. You could trade the channel, and again, I'm not going to get super specific with it, but a lot of different ways to trade it. Was looking for some way to kind of get short this position. Didn't really have anything that I loved. I mean, there's the 4-hour chart right there. There's the extreme of the curve that we talked about, and there was a gap. It drove right into it, and it's kind of bounced and pulled back, and it's a 25 pip bounce, so I'm not going to say that, oh my God, this was the best trade. You guys should have got this one. I was kind of indifferent on it yesterday. I'm still indifferent on it. This is kind of hard. I like really clean things like this and nice, big pushes on things. This kind of back and forth, I mean, it's how the market functions, right? Impulse correction, impulse correction, impulse correction. But I mean, these are pretty big swings back and forth. I mean, could you, this one you couldn't have got an entry. You didn't get an entry. You got a little bit of an entry high. This one gapped down. You could have got something. This one, no. This one, not really. I mean, it's in the upper reaches of the curve. It's at the extreme ranges on the 4-hour. So, I mean, I would say I'm bearish this one. But again, you guys are going to have to do your own analysis or, find something that works great for you. So, it's just not my favorite position. But it's there, right? So that's it of the currencies. And like I said, I mean, they're so, I would expect this one and again, maybe it's come through. I haven't seen anything yet. I've been on, getting ready and preparing for this for the last hour now, hour and a half. Once the 1.9 goes through, I would expect this actually to go a bit higher, right? So, although on a technical basis, I am bearish, but I wouldn't be surprised if we punch higher on this one. Again, you got to pick your opportunities. Let's go back over and again, let's cover the commodities now. Let's start off with oil. All right. So here's our oil chart. So yesterday, again, we mentioned that there was a trading opportunity yesterday morning, right? I did mention to you guys that 61.12 would have been my target. That's the last time that buyers stepped in, right? And I said, could there be a trade here? Sure, if you wanted to. Yesterday at 9:30 in the morning at the open, we literally hit it. We bounced, and it definitely went more than the 1 to 3 there. And then what did it do? It collapsed, right? The original short we were talking about was a profit target at 61.12, right? Again, we were looking for that move. The next time we saw a big movement in price was down here. And again, the next target was going to be 59.96. And I know yesterday when we were up over in this range, we were like, yeah, that's really far away. I don't know, maybe later this week if we stay short. Well, guess what? It didn't take long. Yesterday afternoon, we hit it at 1 o'clock. And what did it do? Here's the line. I mean, again, I don't change these things. I try to leave them on for you guys. There's the line. There's the hit. There's the bounce. And then we kind of pulled back down, hit it again. And we talked about this. There's one. There's two. Number three is what we went through. And then it stabilized itself before going higher. So there's a couple different trading opportunities. With us floating around the 60.92 again, you can see it came back up. And again, the old becomes the new, right? I'd say there's some okay opportunity in this one. Right now where we are, I would say that, I mean, just areas of interest that I'd watch out for. I mean, I think you definitely got to watch out for the 62, 65, right? That was kind of a sticking point, and again, led to this down, push to the downside. I wouldn't use the 60.92 right now. Like I said, it was a good hit, and it was a first profit target. We really need to establish something above it. It may come up in base, and it may be a launching point for tomorrow. But right now, it's not really giving us clear price action to be able to say that that's what we're using. As far as using the lower level down here, and again, I'll go out to give you guys kind of a grander scheme of things. You can see that that was kind of the big sticking point, and actually lower is what took off. I don't even know if I would use that on there. Let's see if on the 30. Yeah, so I'm going to move this forward, and we'll start reestablishing it. I'd say there's a level here, and again, there's a base, and again, a touch and a touch. If for some reason tomorrow morning we can get back down here again, right? I mean, maybe we have an absolute collapse, right? Maybe we have an absolute collapse in the overnight and we're pushing back down here at the 59.70. That could be that could be a level that we take off of for the oil inventory. Remember, we had a lot of freezing in Texas in the last couple weeks. Last week was an absolute huge surprise for oil inventory. If we drive down, that could be a launching point for the European Open. It could be a launching point for oil inventory. Top side. I don't necessarily, I mean, there are some sellers sitting right in here. I don't know if you guys can see the way that these wicks keep coming down. Lower, lower, low, lower, lower, lower. So there is going to be a little bit of a sticking point. When we get into the 61.87 range, there's a potential area, and again, depending on how aggressively hit this one, there's maybe a position here. And again, this is going to be a time-based trade, right? If we're up at this level at 61.73 at news for tomorrow, that could be a potential level as well. So a couple ways that you could draw the curve. I mean, if I had to say right now what I would use, I'd probably say I'd establish the curve level between there, right? And again, it probably didn't save. Oh, it did save. Oh, that's nice. So right there. Hold on. Now that I know that it did save, right? We'll use established there. So again, bearish. I like that this zone is just in this upper third into this range. It's the not so much zone for me. And then again, down here, we're looking for longs. So I think either of those is fine. Long, again, I want to see what time, but potentially turning this into a green, right? And then maybe look for a reversal in the overnight. And don't forget, we can use these same levels for OPEC on Thursday. All right. All right, so there's oil. So let's go into gold. I like gold. All right, same thing. So gold at the hourly level, we had been talking about this and that we had two levels lower, right? The first day, our first level hit, right? Came back up again. Talked about profit targets taking where the seller stepped in, and they did. We talked about that yesterday. We reviewed that yesterday morning. Well, it came down again. It based in that level, meaning, oh, it's going to break. And what did it do? It broke. It went to the lower level starting at 17.13, and then since that time, it's done nothing but basically rally straight back up again. So, I mean, it's gone up about, I don't know, I mean, the low is at what? 1706, and we're at 1730, so about $30 higher. That was actually a late European session starts here. Yeah, that was a late turn last night, but again, it was a technical. This was more of a technical based trade. It's these are levels that we talked about. I think we've talked about these now for a couple days. You guys can see where those two came in. So, what will we do with this one now? I would say, definitely got to keep this on the radar, right? This level here. I'd like to see if we can get some type of basing here. This is a pretty strong level, a strong group of sellers kind of, stack this one. Catalyst that can drive this obviously would be PAL speaking, right? PAL speaking could definitely drive us higher. So right now, I don't want to tell you guys that this is the ideal shorting area. I mean, it's decent, right? It's decent up there, but they're gonna, the sellers are gonna start stepping in a little bit early. I can take this bottom one here. As I said, this was our first target to the downside. It is now officially gone. We still have the bottom, so we'll keep that one on. Yeah, I'd say probably those two. It's getting worse. It's getting worse. Remember, one of the things that we talked about in this big decline yesterday, we were talking about how there's such a huge client sentiment. 83 or 85% of clients right now over on IG are net long. Whenever this gets up in the 80s, you got to typically look for bearish opportunities. So we are in a little area now, but I don't know. I think tomorrow's employment will give us kind of a foreshadow. And again, Powell is going to kind of jack this one right or left. So again, I keep this on your radar, 1713, 1759. Let me drop it up to 4 hours and see if there's anything else that really stands out. No, not really. Let's go up to a daily. Nothing else was really, when I'm looking at it, I'm like, no, I'd say, nah, for now, that's probably good for this week. Next week, we may actually push this one out a little bit more. But for right now, I think keep those two on your radar. All right. Let's go across to silver. So silver, we had talked about a target down here at 26.11. You can see that it not only hit, but also provided great opportunity. Came down and was another stabilization point, and it did break through the bottom. And again, this is one of those things where a call spread beats out a knockout bracket. But you can see it's rallied back up again. I would say that this one is in not necessarily the best shape. I think gold's in a better area. With all of this kind of sideways, and again, this is pretty muddled. Obviously, we have some sellers, right? They shot price back down and was unable to get back up and dropped again. It's an area that it's going to have to grind through. It's in the middle of the curve, and again, I'll go ahead and we'll draw kind of the curve level here so you guys can kind of get an idea of it. Just take them off. Look at that. Gotta love using the fib tool for anything but fibs. But kind of in this range, and actually, you know what? Let me go up to 1 sec. Let me go to 4 hour. Yeah, it's fine. I can use that one still. So being a level that it's got to chunk through, I would say that any of these longs got to be a bit more cautious. Again, we're sitting kind of right in the middle of the curve. I would say, not necessarily willing to take this one as an area, but there is a potential area here, right? We had a little bit of a basing, so this could potentially be something. That could be potentially something. And the reason why I say that is because, again, very strong push, a couple hours straight down. It did try to pull back. It's approaching the top third of the curve again. So a lot of things in there too. That could be an interesting little setup at 27.30. Again, Powell's he's not going to directly speak to silver, but he may give us some insight into this one. So it's all right. I don't know. I think of the two, I think I like gold zones better than silvers. I think oil has the most opportunity right now as far as the commodities. And I think the overall indices where they are, again, I don't need this one now. I can get rid of this because we have this going on. I think top and bottom wise, I think we have a little bit better things set up. Yeah, I mean, I like this. I think this NQ, if this then that is my favorite. And I'm liking this zone also breaking. So there's a lot of opportunity out there. Like I said, look at these different zones. If you're busy and you obviously can't spend all day in front of it, look at these hot spots. Obviously, tomorrow morning is going to be a very big one, right? We got an opportunity here for a nice push for the open. We got a great opportunity for a reversal at 10:30 tomorrow. We got a nice little oil pop that, if it doesn't take off early, we have that. We got OPEC and oil on Thursday. We got Powell speaking, which God knows he could set off some fireworks if he wants to. And then we have non-farm, which is considered the biggest news release that exists besides an interest rate change, and particularly unemployment, which is a presidential kind of I'm getting us back to full employment type thing. So again, don't be surprised if that drops to 6.2 and there's some decent movement to that one to the top side. All right. So let's see. Brian, are these seminars archived? I had to step away for a minute and miss some of what you. Yeah, I believe these are on. I believe they all go online. If you registered or you were here, I think you'll get an email of it. I don't know if all of these sessions are being put on YouTube. They may be, but I know they're on the Nadex website. So yeah, you should be able to have access to it for later. But like I said, it's the information is good for the next day or two, and then after that, sometimes they take them down because we don't want to confuse people with going over like a week, and people are like, well, wait, you said this level. It's like, yeah, but that was last week. A lot can change. But again, Bob, if you're not listening or you're able to attend, we do a live broadcast every morning, Monday through Friday, and we just recently pushed it forward. So for those of you guys that didn't know that were unable to make them before because they were too late, Todd and I bumped them ahead. So instead of going from 9 to 9:15, we now go 8:45 to 9 to give you guys a full half hour to be able to get ready. And they're live on YouTube. So go to YouTube, search Nadex, and hit the subscribe notification button. And when we go live in the morning, you'll be able to see them. And what we do is we try to break down the top 1 or 2 opportunities every single morning that we see. And it uses a lot of what I covered today. All right. So with that said, that's it for us today. I hope everybody appreciated kind of the levels that we had. And I say appreciated because, again, the market can do some funky things. When it gives us some decent levels, you got to respect it. And, again, if you don't respect levels in the market, it will burn you down the road. So I'm always very appreciative when we have clean levels to be able to trade off of. Like I said, trading is not a guessing game. There's no crystal balls. It takes work. It takes practice. And again, it takes study. So again, that's my goal is to make sure that I not only continue those for myself, but for all of you guys out there. So I'll see you guys next week, March 9th, Tuesday, 12 p.m. Eastern Standard Time. If you guys join us in the morning as well, we love catching you guys then. So you guys take care. Have a great rest of your trading day, and I'll catch you next week. Take care.